Hello, this is Brian Shannon from AlphaTron's Blogspot. Today is Wednesday, the 12th of December, 2007, and we saw some amazing volatility in the markets today. First, they experienced a real large gap higher and then began to sell off, turn negative, and then closed the S&P 500 with a gain of $1.39, or just about 1%. Yesterday, we saw a big sell-off after the Federal Reserve made their quarter-point rate cut. And typically, the market takes a couple days to settle down after a Fed rate cut, but the volatility typically will not be as large as we've seen it yesterday and today. And today, look at again the large increase in the volume there that we had seen, as it seems like there's a very large battle being fought, kind of for control of the longer-term time frame on between the 50 and the 200-day moving average. Bullishly, you can say it closed above the 200-day moving average. Bearishly, you can say it closed below it, and the 50-day moving average is declining. So bullishly above the 200 rather, and bearishly below a declining 50-day moving average. You can also bullishly point to this inverted head and shoulders pattern that we'd been looking at about a week and a half ago develop. The market broke past that. That neckline is being tested. So there's a lot of reasons why this 148, 149 level is important for the S&P 500. And when you look at the 30-minute chart here, you can see we did get this uptrend broken, so that's why we started to look at Fibonacci retracement off that. And still, the market holds on at a 38.2% retracement. So it came down, tested that level, but they can't push it below that 38.2% level, at least for very long so far. It doesn't mean this market can't just continue to fail because, again, there's a larger battle being fought here on the daily time frame, and right now it's just really not clear at all. As I've been saying, again, it's a very tricky environment, especially for an investor. And if you're a day trader, it's the emotions are the enemy, but it's when you see that large of volatility, it can be easy to be sucked into an emotional play in the market. You think the market's caving in late at the day. Well, when it makes a higher high and first a higher low and then a higher high right here, that's when they really stuck it to the shorts right at the end of the day. So you have to be very careful in here. This is a 2-day chart of the SPY, and on here I've got the VWAP. So what it shows basically is that, as I pointed out on my blog earlier in the day, that the real battles seem to be being fought around the 2-day VWAP. You can see on the 1 day that basically after that gap up, the sellers were in control pretty much all day, but really where the real battle was being fought was the 2-day VWAP, because that included yesterday's move after the sell-off. So post-Fed, basically, the average price, and we could even just draw it from right here, the average price this market has traded hands at has been about 149.50. So the battle for control after the Fed meeting is still being fought as the Fed continues to, interfere with, so the way some people put it, or influence the markets with their actions. So basically, still it's not clear which way this market's going, and the best bet is for very short-term trades. Just looking at the facts, it looks like we've got the potential for some resistance right now up at about 150.75 or so. That's where we have that 5-day moving average, which is just starting to decline, and also this prior little level of support, and where the market really began its real sell-off yesterday. So 150.75 is important as far as support goes. Resistance rather, support right down in here. This is again where we'd seen those sellers trapped about a week and a half ago. The market recovered from there, and we've got that 147.25 level acting as potential support, with about 146.5 just below that. So it remains very tricky environment. Really no other way to look at it than that, in my mind. If you're an investor, you got to be going crazy in here, I would think. You got to wonder what if people are going to start just giving up on this market. The semiconductors were up $2.40. That's a 0.5% gain. They do continue to hold above that level that I had suggested is going to be important going forward, which is 419. So if it can continue to hold above this 419 level, then there's a possibility that these semiconductors can turn around and head back up towards that declining 50-day moving average. But again, it's only for a trade, so here if you can see, it's got some trend line support in here. So if we take a look at the, basically this move from the Thanksgiving lows to the recent high, still hasn't come down to the 50% retracement, which is also further made important again by just the fact that this is where that prior little level of support was. So 419 is if the market breaks below 419 on the semiconductors, then I think there's going to be bigger selling in that group. 430 looks like 431 actually looks like this support acted as resistance early on. So if I can somehow get back above 431, then maybe it's not as neutral. But right now the market just needs to kind of consolidate here. That we saw. So we've been seeing some amazing volatility. We've got directional conflict from various time frames, and when the market just isn't telling us that there's clarity there, you got to stand to the sidelines. You can say, well, I thought the charts were supposed to help us. The charts do help us by telling us when in doubt, stay out. There's just not a clear trend here, so it's time to let the dust settle and wait for a clear pattern or to emerge that tells us who's in control, the buyers or the sellers. As far as the IWM goes, IWM, 75.80 continues again to be that important level near term. The market holds above that level. Obviously, the bad news is that it gapped up and gave this whole thing back. We had the same late day strength in here. Just real choppy. Looks like the market is searching for support. In this case, right around that 20-day moving average on the daily time frame, and let me take another look at that. But on that 20-day moving average, it looks like it's searching for support after finding resistance yesterday at the declining 50-day moving average. So the market is in kind of stabilization mode here. If it can stabilize here, then there's a chance that maybe the shorts get squeezed, but there's just a lot of conflicting evidence on these various time frames and the various markets. Looking at the NASDAQ 100, let's start with this 30-minute time frame. There's that uptrend line. So we'll draw the Fibonacci off that level as well, and you can see here that the market came down to the 50% retracement and also to the level where this gap did get closed. So it looks like basically this area, 50.85, is an important level of potential support. And if you look at the, a 2/3 retracement would bring it down to this level, which is also this prior support right here at 50.40 and this little resistance. So I think as far as support levels go, 50.80 and 50.40 are the key levels for the NASDAQ right now. And on the daily time frame, again, what we'd seen on the bigger picture is from the highs to the recent sell-off low, the market found resistance near that 61.8% retracement level. Now it's looking like it's starting to settle in. Maybe it was up 46 cents or 0.9%. So at the end of the day, it goes to the buyers, but basically it was just very, very choppy. And again, the NASDAQ closed below the average price that it traded at since that Federal Reserve meeting. So there's still that battle being fought. Tomorrow what we'll do is we'll look at a 3-day VWAP to see who has control since this Fed meeting.